Bob, what's your priority for BP this year?
Get back growing. You know, after 6 years, we've worked hard to meet our obligations in the United States. We can draw a line under the final bill, which is about $62 billion now. We've been able to complete new deals, new projects. We'll have about 6 new major projects coming on in 2017. We've got to do them carefully, reliably. But our focus now is to, get our own engine moving again.
And you need to make sure that you have enough investment so that the price of oil doesn't shoot up again, and therefore, I guess, risk sending us back into recession 5-10 years from now.
Yeah, I don't think BP will be able to drive that in terms of global
Fair.
markets. But I think for us, a disciplined step-by-step, we've got a good plan to the end of the decade, and it's been about time. It's been a long time coming for us.
Yeah, what is this the inflection point? Is 2017 the year where you come back in force, or is it? Are you more cautious than that?
I think for us, reaching the agreements with the U.S. government and the states was a big milestone. It allowed us to understand what our obligations were going forward. That's one inflection point. Doing these recent deals this last few months is another one, and getting the projects on in 17. That period is going to be an inflection point for us.
Will you be able to cover your dividend?
We're working to balance our sources and uses of funds. $55 a barrel in 2017, cover it.
Right, so 55, what if it's 50? Can you still cover the dividend?
Well, our gearing can flex a little bit. Our financial framework and the balance sheet is strong now. But generally, 55 is the target we've laid out for ourselves, and feel good about our ability to cover the dividend.
And how much is the dividend a priority when you speak to shareholders? I don't know if the mood is shifting or whether they really want it this year.
They really want it this year. There's no question about it. They really want it. Mm-hmm.
Yeah, and so what happens if they don't get it?
Well, I don't think there's much risk of them not getting it. I mean, we still have flex. We have a dividend obligation of about $7 billion a year. We're going to spend about $16 billion of capital. We have operating costs about $25 billion a year. We've got a lot of flex there, as well as a balance sheet.
Okay, I was just making sure, Bob. When you were talking about some of your investment projects coming online this year, you've also announced a little bit of deals at the end of the year.
Yes.
Are you expecting more deals in 2017?
Well, this is a good batch of deals we've just done. There may be more. We'll look at it very carefully. We use 2% of our shares in Abu Dhabi to extend working there with a concession to 2055. We just reached agreement in Azerbaijan for the oil concessions in the Caspian to go to 2050, for example. So there's a bolt-on acquisitions to what we do, 3% here, 10% here on things that we do today. This is rebuilding a really good portfolio for the long term, and we've got to be a very long-term company.
Right, and if you're looking at extra deals, what will drive that? Is it valuation? Is it if you find something that's cheap, or is it an asset that you actually can't afford to miss?
I think if it's well, it has to be the economics of it. It has to be accretive to our shareholders. That's how I think about it.
Yep.
And oftentimes, some of those are the good bolt-on acquisitions or interest in things you're already in, because you don't bring any more overhead with it, for example. And there will be the occasional really good thing that comes along. But we're not on the hunt to do deals as such.
Do you think deals in general will come back to the oil sector because of animal spirits? So CEOs seeing the world in a slightly better rose-tinted glasses and therefore, willing to pay cash?
I think you'll see some consolidation in some basins and areas of the world. I don't know, onshore in the U.S. That generally has to happen. There's a sense in some people in the industry that we're somehow coming out of the bottle of the cycle now, so they have to do a deal. I don't look at it quite that way. I think we're climbing very, very slowly out of a tough period in the industry.
And would this be some of the Asian producers being a little bit more optimistic than maybe some of the Western ones? Or do you see a dichotomy or not?
No, I think it depends on your view of the U.S. shales is where I hear a lot of this, basically.
Okay. Do you see them consolidating significantly at some point? I mean, will they become a force that will actually at some point be able to speak with one voice?
I don't think so. The U.S. has a lot of small businesses. There'll be consolidation, and private equities involved with a lot of it, so they'll be buying and selling and things. There'll be some big players there. But I don't actually see that giant consolidation that you mentioned.